Hi everyone, this is Dimitri Pargamanik with MarketChameleon.com. I wanted to show you in this video how you could construct an iron butterfly, and then we're going to go over the outlook of the iron butterfly and look at the market prices to see are you getting a good deal or a bad deal compared to historical data. Now, when you look at, I'm going to use Apple here as an example, and I'm going to the Apple options chain. Let's just go to an expiration. I'm going to go to the next expiration, October 18th, because October 11th only is expiring today. This expiration has 6 days to go. I'm going to go from the perspective that you could either go have an outlook where you think Apple is going to have a big move from its current price, or you think it's going to stay relatively close and expire right next to this current price in 6 days. I'm going to take the outlook in this example that there's going to be a big move just for illustrative purposes. And when you do an iron butterfly, you have 4 legs to it. Let's start out with the first 2 legs. Since we're looking for a big move, the first thing we want to do is buy the straddle. So let's look at this option chain over here. Apple right now is at 235. So I'm buying the 235 call. Over here on this side, I'm clicking on the ask. So over here we see buy October 235 call for $3.15. Like over here, I'm also going to look at the put, buy the put on the ask price. So now we have buy in October 235 put for $3.20. We have this. Let's run a payout diagram at expiration. This is what it looks like at expiration. It'll cost us $6.35, roughly 2.5% move. And as we could see here, if you get long the straddle, at expiration, the move has to cover the cost of the straddle before you break even or start making money. And then after that, it becomes profitable. So that's what the green line is to the downside. And this is the green line going to the upside. At what points it becomes profitable. This is a pretty big move here. Maybe you don't feel as confident about a $6.35 move, $6.35 move. That's when an iron condor comes into play. But before we even do that, let's just take a look at the theoretical value. Historically, how did Apple move? Did it move enough in a 6-day period to cover this cost? So that's what we're going to look at. So theoretical value, I'm going to change the parameters to 6 years of data. I'm going to reload that. And now we see here, this is the theoretical value. This is the current price, $6.25, $6.35 compared to the theoretical value, which tells us that if we took Apple's historical percentage moves over a 6-day period and converted it to a value, the average end value at expiration is $5.48. That's the average end value versus $6.25, $6.35. So if you pay $6.35 right now, you're paying up 87 cents. So it's an 87 cents theoretical negative edge. You're overpaying compared to historicals. And based on historical moves, your win rate is 31.4%. In other words, 31.4% of the time, Apple made a big enough percent move over a 6-day period for this price to be profitable. Now let's go back and see if we could improve these odds. Can we improve this win rate? Can we improve this theoretical edge by selling the wings? This way, the necessary move required is not as large. So let's go back to the payout diagram over here. We see here we need 635. Now we have the straddle on. We bought the call. We bought the put. Let's go out $5 from this strike. So from 235, I'm going to go to the 230 put and sell that. So we're going to bring money in by selling that put, right? And that's what popped up here. Selling October 230 put for $1.58. Then I'm going to go from the 235 strike. I'm going to go up $5 to 240. And I'm going to sell that call. So the 240 call, I'm going to click on the bid side. See here, the bid side 108. and we see it popped up in here, selling October 240 call for $1.08. And now let's reload this strategy and see what it looks like. And what you're going to see is that the required move, this in red, will get squeezed in. You need less of a move now before you hit profitability at expiration. But you also see the wings capped. Because remember, we're selling the put, selling the call. So this also caps our potential gains if Apple just continues to move more and more. So let's reload that strategy. And see here, it looks like a butterfly with the wings out here. Well, that's what it looks like. Now, see here in red, we used to need a $6.35. It needed to move $6.35 in either direction. Well, now it's $3.69. That's what we're paying for, because now we received money for selling the put, selling the call. And of course, it's a $5 iron butterfly, right? It's $5. I would move $5 away in each direction, so the most it could be worth at expiration is $5. So now that we see this, let's take a look if we improved our theoretical edge and if we improved our historical win rate. So I'm going back to the theoretical edge. I'm going to put this to 6 years. I'm going to reload it. So we see that the market is 356, 369. Historically, in the last 6 years, based on the moves, the average end value is $3.46. So we could see that it's still priced a little bit high. The market's still priced a little bit high. If you bought it, theoretically, you're paying up 23 cents above the average end value. Your historical win rate is 54.7%. So this improved and this improved. It's not great, but now you have a higher historical win rate, 54.7% of the time. Apple did move enough over a 6-day period to cover this cost. But on average, the end value is 346, 369. And then you have to really decide how strongly do you feel that there will be a big move from the current. And today, move $5. So possibly, one thing you might also look at for catalysts is there anything between now and expiration that could be a catalyst for a very big move in either direction. So we don't have any earnings coming up. I don't see any catalysts right now, but of course there might be some that we're not picking up, and that's one thing that you have to decide. Is this a good price for you based on your outlook and how historically it's moved in the past? Thanks everyone for watching. Hope to see you in the next video. Bye.